Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today, we have one of our rare second-time guests. We have Joel D'Souza back, and he's going to tell us all about some of the new passive investments he's gotten into, some extra live-in flips he's done since we last talked, and just generally what he's doing with his portfolio and where it's going. Hey, Joel, how are you?
Hey Jordan, thanks for having me back. Looking forward to kind of chatting with you and catching up again.
Yeah, absolutely. And I know we talked a little bit before, and I'm really excited to talk more when we get into the episode here. Um, Real quick, before we get too far into it, Joel, I know we asked you this question last time, and I'm really interested to see if it's changed. What is your favorite restaurant in Austin currently?
Oh yeah. Just this past week, we went to ABBA in South
Mm.
Congress or on South Congress. It's been one. I think it opened in the pandemic. We never could go. They're always booked up. But being my wife and I kind of being from the Middle East, it's good to go to like there are a few Mediterranean restaurants. I think the last time I recommended Shandy's, which was a Persian kebab place. Abba is kind of like a American Mediterranean fusion restaurant, and even the ambiance, the drinks and stuff are pretty cool. So yeah, I think Abba is a place everyone should check out. Just very hard to get reservations.
It's so good though. I've actually been twice. Once we just walked up and lucked out.
Yeah.
Um, I ate so much pita bread when we were there, all the different hummuses they have, and
Yeah.
it's so good. I love Abba.
So yeah, it's pretty good. It's pretty good. It lived up to the hype, and it was 2 years, and then we finally. I think we went last Thursday. It was good. It's good. Definitely recommend. Highly recommend it.
Yeah. Oh yeah, me too. I love it. Um, awesome. So real quick, before we get too far into it, Joel, can can you just go over who you are and how you're involved with real estate investing? I know we had a quick intro there, but just let's go into it a little more in depth.
Sure. I mean, my wife and I, we bought our first home in 2008, I think, right after the crash, and it was our first home. We bought a townhome in Virginia. We lived in the Northern Virginia area at the time. And it was way out. We couldn't afford anything like closer to DC. So this place, it was in Haymarket. We were 45 minutes away. And all our friends were like, "Oh, this is crazy. Why are you guys moving all the way out to the boonies?" But yeah, uh, it was just what we could afford. We were on a single income. At the time, my wife had just quit her job and moved from Boston to Virginia, hoping to find something. But unfortunately, with the uncertainty of the economy, she found it very hard to get back into it. So we were on just my income. We landed up buying a place, and we lived in it for a couple of years. Our family started to grow, and then when both her and I, we went back to school and we graduated. I did my master's. She got a second bachelor's, and then she got into tech as well. She was in an econ major
Mm-hmm.
and political science minor, and then she switched to tech because I was in tech right from I did electrical and computer engineering.
Mm-hmm.
So she liked the work that I did, and I went to school. I was doing my master's, so she just kind of in the same. We went to George Mason University, and we both were in school together. I think we had two kids at the time, so it was just
Wow.
like shuffling back and forth. And
Yeah.
I was working full time. Then eventually she started work as well. And then when we could afford, we moved closer to the city to Chantilly, like close to Fairfax, if you guys know, but closer just to open up more job opportunities for the kids for school and those kind of things. So we moved into a bit of a fixer upper, got a decent deal on it. Again, no idea about we're first generation in the States. So, my wife's parents have lived here. They bought a home, but they lived in it for like 15 years since when they moved. For me, I came here only to study and had to kind of feel my way around and learn everything myself. So managing money and all of that. So we landed up buying, and then with our townhome, we were like, all right, what do we do? Sell it or rent it? And then just I guess the thing of growing up was just like never to sell real estate. Just
Hmm?
keep it as long as you can. So we're like, all right, let's try renting it out. And it was kind of a class A neighborhood. So we were getting uh we landed up living in this new house and we rented it out for 2 years. We were getting class A tenants, very picky about smells and appliance, um, you know, the type of appliances they wanted like Lion and Wolf. And I'm like,
Oh, wow.
it's an 1,800 square foot townhome. That was our first tenant
Did
coming in, and
did they
I
pay
thought,
Class A rent at least?
yeah, the rent was really good. We were
Yeah,
cash flowing almost. I mean, our I think our interest rate was pretty low, but yeah, we were cash flowing decent on the townhome.
you can't do that
So
anymore.
no,
Yeah.
especially not if you buy it as an investment. Maybe if you do it, buy it as as a primary, live in a couple of years.
Mhm.
But yeah, as a investment, not in Austin at least. And even in Virginia, I have a buddy who sells real estate. We tried, it's nothing.
Mhm.
But yeah, so we became accidental landlords, and
Mhm.
we thought Class A tenants were difficult, and just meeting those kind of requests, but no maintenance, no headaches. But it was too much for us, right? With our young family and with dealing with our house that we were in was really tricky. But then we decided to move to Austin, and we were like, all right, we plan to sell both of the homes, and the home we were in was about 27, 28 years old.
Mhm.
It was in a nice neighborhood though.
Yeah.
So the basement was not done up. So we just consulted um, a realtor and he was like, hey, just finish up your basement, add square footage, do whatever. So kind of I managed that whole process and, my wife and I, and, she picked the materials, did the design bit, I did the planning and worked with the contractors. We did it up and then we landed up putting it on market. We had it done up really well. We staged it, took in really nice pictures and drone footage and all kinds of stuff. It was like,
Mhm.
I think when we bought it was a 3,600 square foot. We bumped it up to 55. We added about 2,000 square feet.
Wow, that's a lot. That's a whole
Yeah,
lot.
and yeah, we added a basement. We cut out a window. Yeah, it was a big mess. But yeah, from a 5 bedroom made it a 6 bedroom, so it added a tremendous amount of value. Added a bathroom. It was like a 3 month project, but we had to do it quick to get on market. That
Mhm.
was just 2018. But yeah, we landed up. We made a decent chunk of change over there, and then we were like, oh, this is interesting. That
Mhm.
just organically we kind of were able to. She has a good design sense. I'm good at. You're kind of working with contractors, building
Mhm.
rapport, and just getting things done in time.
Yeah.
Um, yeah, so then when we moved to Austin, initially we were just like, oh, we took all the money and just put it in the house, and we were like, nope, not dealing with tenants, didn't want to deal with them. But then as then I read Rich Dad Poor Dad, and I was like,
Mhm.
just that concept of entrepreneurship and just building wealth and the traditional savings way, the way my parents did it, it just wasn't going to cut it. So then we changed our mindset, we did a cash out, bought a couple of homes, and then we bought in Class B, C-ish neighborhoods,
Mhm.
which we still have those. And then, yeah, we kind of saw that worked.
So
And
you
from that point,
started with the live-in flips. And so
yeah,
you live-in flips a great way to build a lot of equity, and there's a lot of
yeah,
tax advantages of doing
yep,
live-in flips
exactly.
too. Did you live in the first live-in flip for 2 years?
Yep. Yeah. So that's the thing. It just kind of organically happened where we were
Oh
like,
yeah.
we were talking to our tax consultant. We were like, oh my God, we're going to, this is how much our value has gone up. But we're going to, he was like, how long have you lived there? And this was March. And he was like, in May, you complete 2 years. Just try to delay it. And I was like, we did not
Stay.
even
Yeah.
plan that. Yeah, we did not even plan it. So we were like, okay, I mean, 45 to 60 day to close, or whatever. We'll just go to market and tell them we have to close on May 31st so that
Mhm.
we'll end up being so that's when we started looking at tax laws and deductions and that's the thing, like when we grew up, financial literacy was something that wasn't really taught to us,
Mhm.
and now we're learning that and we're trying to instill and teach our kids. So my 10-year-old actually comes with me. She's shown interest in it, so she comes with me to showings. We manage our own property, so I take her with me. She helps me. She talks to some of the tenants sometimes with like showing them around the house and talking to,
Oh,
so
cool.
yeah, and just give her some pocket money to spend the day with me and help me clean out the house and stuff
Mhm.
like that when we're getting it rent ready. Um, so yeah, it's something we've just kind of, it's something that fit our lifestyle with the passive investing, where we
Mhm.
are able to talk to our children about it, and just tell them about why we're doing it, and why,
Mhm.
yes, we have to deal with it. So right now, I just filed uh, on one of our properties. Our tenants haven't paid for 4 months. Just filed an
Wow, it
eviction.
was
Yeah, I just filed an eviction yesterday, and sent out notice the week before. So kind of explained. She overheard the conversation. She was like, "Hey, why are you kicking out our tenants?" And I was like, no, we have a relationship with them for 4 years, and we gave them a chance, and they're just struggling to pay. And right now they're not answering my calls and this and that. So I was like,
bummer.
we have to go forward with this. So,
Mhm.
but yeah, it's a good, for them, it's like good and evil. And she's like, "Oh, Dad, you're being the bad guy. You're kicking people out. They're going to be." I was like, no, no, it's not like that. We work with them. We try to give them a heads up. But some folks, it's hard. It's a tough time right now in the economy. We get it, which is why
Yeah,
we try to work with them.
yeah.
But yeah, I mean, I just love the fact that we're able to at least kind of teach our kids that, and teach them about like basics, assets,
Mhm.
liabilities, how to grow wealth, and those kind of things. So yeah, I mean, that's kind of us in a nutshell. So we landed up, flipping the second home. So when we were more aware, when we moved to Austin, we did it again. We
Mhm.
we landed up living for exactly 24 months, and then we moved, and right now we're in Leander. So technically we could do it again, but I'm done moving.
Yeah.
So
Yeah,
we've
it's
just
a
built a
lot.
ton of equity. Yeah, it's a lot.
But I mean, I think that there's so much power in that. So I know so many people how they
Yeah.
got started in real estate investing was utilizing their primary residences as some sort of investment. And it's so easy to overlook that. I mean, obviously there's the house hacking strategy where you buy a
Right.
duplex or a single family and you rent out all the space you're not using.
Yeah.
And there's a lot of people that say, hey, I can't do that, or I'm not willing to do that, or whatever it is. But there's so many other strategies. Like you said, you were almost an accidental landlord. You moved out of your townhome and just kept it, and you keep that as a rental. Or you do the live and flip, where you move in, you fix it up, you live in it for 2 years, you sell
Yeah.
it, you're tax free, you can then reinvest that. So, Joel, where are you at today? What do you have here in Austin, and what sort of investments have you made to date here? I know last time we
So
talked, you had a few single families and you'd just gotten into passive investing too.
yeah, so we had gotten into one deal in so we're heavily invested right now in Texas, mainly in central Texas in the Austin area. So
Mhm.
we have three long-term single families that we manage ourselves. Like, I mean, we bought one more in the pandemic, so kind of got it at kind of at an inflated rate, but the interest rates were low, so it's okay. It's cash flowing, not a hell of a lot, but it's okay to just keep it in our portfolio.
Yeah.
Um, but passive investors, so we've invested in a land deal in Del Valley. Again, unfortunately, it was in the peak, but commercial hasn't gotten hit as bad. It just right now they're finding it the general partners are finding it hard to exit. We're limited partners on the deal.
What was the business plan for the land deal?
It was more of acquisition, hold for a year for
Mhm.
tax reasons, and just kind of pull some light permit, some design, like figure out the concentration of what can be built on
Mhm.
what parcels of land. I believe it was 120 acres in Del
Oh, wow.
Valley.
That's big.
So yeah, and then the plan was to sell, but unfortunately, with high interest rates right now, compressed rates, like values basically,
Cap rates, yeah.
the GP is finding it hard to sell for what they wanted to. We could still turn a profit, but I think they just want more, which is
Well, yeah.
understandable. So
Yeah,
we're
who
just like,
doesn't?
hey, exactly. So
Yeah.
I mean, when you're talking in the millions, it's like 5 to 6 million makes a huge difference.
Mhm.
So yeah, anyway, so there's the Del Valley. We just got in on a deal in Kyle, which was I think 80, let's say 80 acres. I can't remember, 75 to 80 acres. Again, same thing. It's like, but this particular um, gentleman, I've worked with him. I have a working relationship for about 4 years, and I think he wants to like zone and develop on it as well. And they basically have a build for rent model. So they build a bunch of like single families, multifamilies, And then he wants to keep part of it and then sell the rest,
Oh,
I guess. And
cool.
I think he's trying to build it for himself. And then the other one, which the project is almost complete, is a single family in on the at the MLK Junior stop,
Hmm.
the rail. I don't know if you've seen it. So we invested in that high rise out there. So that's almost complete. I think they're at 80 or 90% occupancy. And again, they wanted to sell it, but to like Greystar, one of the big management
Oh,
companies,
so it's a
but
multifamily?
it's a multifamily. Like, yeah, most of these are, so the bill for rent are mostly multifamily plays,
Mhm.
and only the one land deal that we have is kind of they wanted to hold it for a period of time, but it just right now, just with the timing, there's nothing like they don't have a development, they don't have an aspiration to develop on it or the expertise probably, so they're just
Yep.
waiting to sell to find the
Okay.
right buyer. So yeah, those are the deals that we're in, and yeah, just constantly kind of looking at. But right now, again, with the market the way it is, I want to sit a little bit on cash and
Hmm.
kind of a little uncertainty, right, with high values and high interest rates. So.
And how did you find, I know you said you recently bought a single family, but how did you find these passive investments? So when we talked first that you'd done one, um, if I'm the land deal, I guess you'd done when we first
Yeah.
talked. How did you find these next two? I think that's a question a lot of people have is like, hey, where do I find these? And they're really
Yeah.
cool, and some of them are awesome and great returns, and you do nothing. Yeah.
Yeah. I mean, but there is a risk involved, right? Like
Oh,
when you're
absolutely.
putting, yeah, because you have zero control over it. But
Hmm.
I think it's something that's worked for my wife and I. So finding someone that you can trust, obviously, and you
Hmm.
have a working relationship, which is hard unless you're in it. So I used to go to a meetup pre-pandemic, and they're just networking. So with syndication, it's actually essential on how you meet the general partner, right? Or
Hmm.
how you meet the sponsor of the deal.
Which
Um,
meetup was that? Is it still going?
It is, I believe it's the commercial one at Casa Chapala.
Oh, the
It's the
commercial investors lunch?
Yes, correct.
Yeah,
Yes,
that's a
that's the
good
one.
one.
Yeah, that's the one I met. This particular gentleman who works for a larger development firm, and but the land deal I got in, he was doing this on his own because I have a working relationship. He's like, "Hey, this is my first deal. Do you want to get in on it?" I was like, "Yeah, sure." But
Nice.
yeah, so it's essential how you meet because I think there's the whole idea of sophisticated versus accredited investor, and then how you're introduced to someone is essential. So I have a work, if I was a syndicator, I know you at
Hmm.
a certain professional capacity. So I can approach you with a deal. But if you refer me to someone, I can't take that at face value. I need you need to properly introduce me to the person and but also me as a sponsor, I can approach I can't remember what the actual term is, but I can like I can solicit basically and just like, hey, investors, like on your podcast and be like, hey, I have this deal, give me a call and we can do that. So there are certain type of sponsors can do that.
Hmm.
Or on the other extreme, it's you just approach friends and family and raise money. And I think
Yeah.
that's essential from if the person tries to sue you and it's like, hey, I haven't got my money back. And then it's like, how did you meet the person? I think that becomes a bit of a legal thing.
Oh,
But yeah,
yeah.
for me, it's just, yeah, through networking events and understanding that if I put money into this, there's a potential I could lose all of my
Oh,
capital,
yeah. Oh, 100%.
but there's a really good upside too, right?
Yeah, and
Being real estate.
I think those SEC exemptions are really important to understand for people that are going to go raise money. And you
Right.
definitely want to talk to an SEC attorney about them. I'm not an SEC attorney. I don't play one on TV. But I think you're talking about the 506B. There's
Correct. Yeah.
friends that there's like 35 friends and family that are non-accredited you can bring on. And then
Yep.
you can bring on an unlimited number of accredited investors, but you can't advertise it. 506C,
Correct.
you can advertise it, but they can only be accredited. Um,
Right.
and when you become accredited, it's so much easier to make investments because there's so many good investments out there. But like you're
Exactly.
saying, the 506B, they're kind of like secret good investments, and you have to know
Yeah.
the right people. But
Yeah.
like you're saying, Joel, like just going to those meetups, meeting people, building that network, eventually you will have you'll be a sophisticated investor that knows other people with these 506B
Correct.
opportunities, and you'll be able to participate. Of course, they're going to qualify you and make sure that you actually know what you're talking about before they
Right.
take your money, because they don't want to get in trouble with the SEC. That's a big deal.
Yeah, exactly. That's the essential part. So that is something like, I mean, my wife and I have been meaning to kind of work on it and just get accredited. But
Mhm.
the thing is, we, it's kind of one of those things because you have to build trust, right? That I do get emails from those meetups for, apartment buildings around the country and stuff like that. But somehow
Mhm.
I don't know them on a personal level. I met them once or
Sure.
twice. So I don't really, yes, they're working for big organizations, but I'm like, I have my network of like 2 or 3 GPs and sponsors that I work with here. So I'm
Yeah.
like, I've been like kind of procrastinating. But yeah, ideally next step would be to try and get the accredited. Right now, I am a sophisticated investor just because
Okay.
because I just have invested in deals. I understand how it works and I'm willing to take on the risk.
Sure. And again, like not an attorney, definitely talk to an attorney, do
Yes.
your own research. But the best I understand, an accredited investor, to qualify as accredited investor, all you have to do is make over $200,000 a year. It might be 250 now for the last 2 years, and you expect to do
True.
that again, or have
Mhm.
over $1 million net worth, and
Yeah,
you don't expect that to change anytime soon. So for
exactly.
people out there listening, like you meet that criteria, and it changes if you're married too. I think with the
Yeah.
income, not the net worth, but you might meet the accredited investor criteria and be able to participate in a lot of these deals, which again, they're like Joel, like you were saying, like they can be great, but you can also lose all your money too. So do your due
Yeah.
diligence. And I like what you're talking about, Joel. Like these people, the character, you understand, is this a trustworthy person? Like I've known you, I've eaten with you, a pre-existing relationship with you for a while. Like that's how I like to invest, is I know the person, I can trust them.
Yeah, absolutely. When you're parking away a good chunk of change, you want to know where it's going
Yeah.
into, what's the play, because with most of these other deals, they're kind of maybe could be value adds where they're buying kind of a distressed office building and then they're gonna add some value, renovate it, and then but you don't get visibility into the actual workings of it, right? Like with most of these deals that we've gotten in here, yeah, one was my neighbor,
Mhm.
and two are with the ones with this gentleman, and one's with I actually went and saw the building like when
Mhm.
it was excavated, and now it's like a high rise. So I work in the city, so I take the train in and I see it every day. So I'm like, all right, that's where my money went. So
Oh,
it's
really?
not like, yeah. So it's kind of cool to see what you're investing in as well, especially when you're getting it. Maybe eventually when we have $1 million to throw around, then I'll be like, all right, whatever. But
Yep.
for now, I'm like, I would, since I'm channeling the funds, we and the other thing is, at least for something that's worked for me, and in terms of a sense of diversification, I don't park everything with one sponsor. I try to
Mhm.
split the load, and even if they're like, hey, can you do a little bit more, I'm like, I could, but I don't want to.
Mhm.
And just kind of divvy it up, and just because we haven't gotten a solid return unfortunately yet. So but we're closing into 3 to 4 years on most of our deals. So we'll see once we see the returns, we're like, oh, this is cool. And it works for us as well from a tax perspective. Like we just
Oh,
park
yeah.
the money in, and it's long, anything more than a year is considered long term. So again, folks, I'm not an
Yeah.
attorney, I'm
Talk to
not a
your
tax.
accountant type of deal.
Exactly. Talk to your accountant, talk to your attorney. I can speak for myself that this is just kind of self-taught. So I could have
Mhm.
missed a lot of details, but at least it works for us where we just park a bunch of money. I don't mind seeing it in like 2 to 3 years. And even
Mhm.
if I don't, I ideally like to get into things that don't pay me a dividend, because both my wife and I work in tech, and I just don't want more income sitting on
You
top.
can't write it off. You don't have the real estate professional
Ex-
status. Or do you?
exactly.
You're probably pretty close. Um,
I'm not active. I don't have a real estate. I don't spend uh like I
se-
think it's, what is it, 35 to 40 hours or something, right?
76, I think it's, again, talk to an accountant. I think it's
Yeah.
750 hours for a
Yeah.
year. I
Right.
know, because the only reason I have any idea about this is because I am a real estate professional. That's
Right.
what I do all day, every day. but my business partner on the single family home buying business we have was not, and we couldn't take advantage of a lot of the cost segregations and accelerated
Right.
depreciation. And yeah, it had to be a real estate professional. But yeah, I really like what you're saying. Like, you're going and seeing these investments, you know about these investments.
Right.
I like to do the same thing. I was talking to somebody the other day and they're like, oh, I invest passively because I don't want to see anything about it or hear about it ever. Like, that's not me. Like, I
Yeah.
invest passively sometimes, but I want to go see it. I want to know the
Yeah.
person operating it. I want to see
Right.
it
Right.
being kept up, or the build is coming along the way it should. But you said you actually take the train from Leander downtown?
I take it from Lakeline to downtown. Yeah.
That's
I
awesome.
mean, yeah, I mean, CoStar is a, commercial real estate company, right?
Hmm.
And they own a bunch of verticals. So the lands vertical, lands.com, is
Hmm.
based in Austin. So that's the vertical that I work.
Oh,
So
cool.
yeah, and they're right on Congress. So yeah, I take the train in, and it's a cool ride, but I get kind of lost in my thoughts. I get to listen to podcasts like the one you like
Yeah.
your podcast. So it's kind of cool. It's good reading time, podcast time, me
Hmm.
time on the 40-minute ride to the city.
Yeah. Oh, that's a great way to do it. Take advantage. They call it windshield time, but you don't even have to
Yeah.
drive. So
Yeah.
got one of the few people who's got an arrangement where it makes sense to take the train right now here in Austin, and that's awesome. You're taking advantage of it.
Yeah, it works. It works.
Yeah, where you live, like, why would you drive down 183 on your own to
No.
get downtown rather than just take the train and sit and do whatever you got to do?
Yeah, and then pay for parking and stuff. So my company covers the train ride. So I'm like, I just drive there, park my car for free, and just ride the train to the city. It's
That's
it's a
amazing.
it's a no-brainer. But of course,
Hmm.
on certain days when it rains, like this morning, it was pouring, but I didn't go in. I was like, I'll work from home today. So I have that flexibility, but
Oh,
it's
cool.
kind of nice to kind of go in once in a while, be around people, and
Hmm.
post-pandemic, definitely a breath of fresh air.
Absolutely. So Joel, you've done a lot of real estate and different kinds of real estate investing. Obviously, you've got single family flips. You've done a lot of live-in flips. Sorry, single family rentals. You've done a lot of live-in flips, and now you've done some passive investing. So you've got some different ranges of experience. I'd like to talk to our guests. What would you say the biggest mistake is that you've made in real estate investing so far?
Mm, I don't necessarily at this point, considering my wife and I have done it for about 13 years.
Oh, nice.
I don't see it as a mistake or anything as mistakes. I
Hmm.
see them as kind of learning experience. You just
Sure.
kind of grow
So,
and get better.
well, yeah,
But if I
exactly. What
were
would you
to,
not do
yeah,
again that you've learned in the past? That, yeah,
okay. All
this
right.
is what I'm going to do
Yeah,
going
yeah.
forward.
Yeah. That was a very interview answer, right? I felt like you were interviewing me and I had to spin it off. But anyways,
Yeah.
I mean, yeah, so the Virginia, like the property that we had, like I said, I was just like, nope, not doing this, sold everything, and we got
Wow.
taxed like crazy. So for me
Oh,
right now, it's like everything from a tax perspective. And
yep.
then I learned about the 1031 exchange, right? So
Hmm.
even if I didn't want to hold on to it, it would have been nice to like save that equity, not pay the tax, and kind of move the asset. It was a single family dwelling. We could have just bought a single family or duplex or anything residential up to a quad
Yeah. So you
out here
sold
in
both
Austin.
at the same time, both in the
Yes,
Virginia, and then they only allow you to do one of those
one
exemptions at a time, unfortunately.
exactly. So I don't know, I was just like, I had way too much on my plate with the renovation where I was like, I told my wife, I was like, can you please look into the tax thing? And I mean, neither of us are tax professionals. So
Sure.
she was just like, when we consulted our tax professional with, I think sometimes tax professionals, unless they're financial advisors,
Yeah.
don't advise. They just want to do
No.
your taxes and be like, hey, I saved you a bunch of money, but they don't talk about like deductions. So a lot of it is you either have to research or talk to a financial advisor who's going to look at everything. And even they're a bit like, unless they don't have the whole picture, they're not going to tell you.
Yeah,
So
especially if they're like, unless you're paying them a hourly
exactly,
rate
a
or
fee.
something. Um,
Exactly. So yeah, so my wife kind of looked into it and she was like 2 years if you've lived in the property and we met that criteria. So we're like, this has got to work. And but
Mhm.
then yeah, the thing we missed was we sold two primary because we had moved out of the old, we had lived in
Yeah.
the old house 3 out of 5 years.
Mhm.
So because of that, or was it 2 out of 5 years, something like that. Like even if you rent it out, if you've lived in it 3 out of 5 years, yeah, something like that. But we met that criteria, even it
Mhm.
being an investment property. And of course, in our current in the home that we had flipped, we'd lived in it for 2 years. So we're like, oh, this is great. But then yes, you cannot sell a primary property for 24 months.
Yeah.
And again, not a tax professional, but I'm just putting it like that was the rule, and we kind of missed that. So, but
Yeah.
ideally, we could have 1031. It made sense to sell our primary, but the investment, we would have had to realize, hey, we're selling it as an investment, just lift and shift and buy
Yeah.
something out here in Austin. But if I have to think back, it would be that. Um, Single families right now, I think it's cyclical. I get burnt out by man because we manage it ourselves, and it's about
Mhm.
45 minutes where we bought the homes.
Oh, really?
Um,
Are they down
yeah,
south or something?
they're out east, but they're in Huddle.
Oh,
Huddle.
okay.
So
So
yeah,
they're on
so
the east side of town. You're up
and
on the
we're on the
northwest
west,
side.
northwest, exactly. So
Yeah.
it's a bit, especially when it comes to showings and stuff. But again, do like I come very close to being like, let's sell it or let's get a property manager.
Yeah.
But I'm like, that's gonna one, we're going to get tax heavily because we can't buy anything, even though
Yeah.
they've increased in value. But and then the second is it'll eat in, if we get a property manager, it'll eat into our cash flow. So I was like,
Mhm.
no, no, this is something I think we have to manage. But what it is doing also, it's helping me grow as a person. I was non-confrontational
Mhm.
in both. I mean, more in a business sense. I like, I did not like people not liking me. Couldn't
Sure.
stand that.
And you
So
have to be the bad guy as a landlord sometimes.
sometimes, yeah, yeah,
Yeah.
sometimes, and
Not a
within
bad
reason.
guy. You just have to
Yeah,
be fair. It has to be
yeah,
straight to the point.
exactly. Yeah, yeah, and like even dealing with this, unfortunately, we came. Well, it was fortunate that we didn't have to go through the eviction last year on with one of our properties. The tenant was not paying, and then we kind of. But I didn't have a relationship with them long enough. It was literally in their first year. By month seven, they were
Oh, wow.
delaying payments and stuff, and then kind of work for them, try to work out and be like, hey, you guys are a month behind. I cannot do this. I cannot do this. And then I literally did cash for keys and I was like, just leave.
Oh, really? You just
Yeah,
gave them some cash and they got
just
out?
gave him some cash and I was just like, leave. And like within 3 days they were out. So because
Yeah.
I was like, and she did not want an eviction on her record. So it kind of
Yeah.
worked out,
And
just
evictions are
fixed it up.
expensive too. Like you got to pay a lawyer to do those a lot of times, or you got to do all the work yourself.
Yeah. So and that's the other thing. So again, to learn the process, I'm doing myself. So this
Mhm.
one, uh, we thought, I mean, I don't know if my tenants understand what the process entails, and I mean, they know they don't want an eviction on record, but I mean, if they're just gonna squat, I mean, I can't and not
Oh, yeah.
respond, not want to. So it's hard. It was a very tough decision. I tried to work with them, and I said, look, I know you don't want this,
Mhm.
but they just owed us so much that I couldn't do cash for keys and like let it
Four
be. So yeah, 4 months.
4 months?
So
That's
four
wild.
months.
What's that,
Yeah,
like
I
eight
tried to. Yeah,
grand, 10 grand?
pretty much 8 grand. Yeah,
Wow.
try to work with them and with late fees. So yeah,
Mhm.
try to like work with them. They only made like two payments this year, so and they kept saying, we'll make the payment. We're not those kind of people, and they haven't been. They've never been late in 4 years, right? So in
Mhm.
all fairness, I was cutting them the slack.
Yeah, that's sad.
Um, so just giving them the benefit of the doubt. Let's put it that
Mhm.
way. And it just didn't work out. And eventually they were like, you know what, we'll just go to court. And that's literally the last text I received. And I was
Wow.
like, all right, cool, let's go then. So yeah, we filed the eviction. It got approved, like the court stuff. So we're just kind of dealing with that. I don't foresee it being hostile. I hope not. But that's the thing. That's where my growth, like there were so many times he kind of, the tenant kind of would send me the messages like, hey, stop messaging me, or just kind of stern. But I was like, I would just ignore it. And but I know that's growth, because 4 or 5 years ago I would have just been like, hey, you guys are late, they just put it
Yeah.
on them. But I was like, you know what, I get it. It's a stressful situation for
Yeah.
them. I can potentially take the hit, and it's fine, but it's a sucky situation to be in, right? I think they just had a grandchild, and so just knowing a lot of their personal stuff, I was
Mhm.
just like cutting them a lot of slack. And yes, 4 months was, people, business folks are going to be like, that is crazy, and I get it,
Mhm.
but just trying to get some humanity into it and
Yeah,
be
you're
like,
trying to
I
work
didn't
with
want.
them. They've been your
Yeah,
tenants
yeah.
for 4 years, sounds like.
Exactly. We had a good working professional relationship, and they always deposited checks in time. I never had to remind them. And these were our tenants that we inherited from the prior landlord. So
Ooh,
on paper, I would never pick these folks, but it changed my perspective to say people change. But
yeah.
I mean, unfortunately, we are going through a time right now, so I wouldn't pin it to them changing as people, but I think it's the economy. The husband's in construction, the
Ooh,
wife works at Walmart, so I mean, I think they're just struggling to make ends meet, and you just kind of got to work with them. But if not, you kind of have to push through. But yeah, I mean, point being is, I feel like I've grown. So single family, even though I would probably say, hey, single families suck and it's such a management headache. But I know at some point, really, it's just me being like, uh, like honing in on the
yeah,
situation
you're
right now and being
stuck in
like,
it right now.
yeah, exactly,
Yeah.
exactly. Because it was literally from one tenant, with one almost going to eviction, to
Hmm.
one of our tenants saying we're moving out. So I had to go there and do the showings and stuff. It took a little longer to rent, and literally I signed the lease, and then the third property started with delayed rents and no rent payments, and I was just like, oh my God, like what are the odds that for the first few years of owning this, not much happened. It was just like a broken AC,
Yeah,
a fence
easy.
fell down. Yeah, and
Hmm.
now it's just like all three are just giving me the runaround. Just
Well,
like,
maybe you'll have another good 3 years after this too. So you got it out of the way, then you're good
I
to
hope
go.
so. I hope
So,
so. I hope so, man.
So Joel, what's next for you? It's it sounds like you've done a lot. You've done your live and flips, you've done the single family, you've done some passive investing. Well, where are you going next?
So, we've been wanting to get into
Okay.
short term rentals, into Airbnbs. But just the uncertainty, well, obviously interest rates and prices. We were actively looking for like 2 months now, and
Hmm.
all around the country. We were looking in Tennessee, the Smokies. We were
Hmm.
looking around Disney in Orlando. We were looking in Colorado and patches and near the Rockies and stuff. So
Oh,
we
cool.
looked around, connected with agents, but the returns just weren't. They just didn't. Unless you were going to a very high price point where you were willing to park away maybe a quarter,
The
like 250 to 300,000,
Yeah,
right?
the high price million plus
Yeah,
properties.
yeah,
Yeah.
exactly. So the price points that we were looking at, because we didn't want to park away a ton of
Hmm.
funds into it. So we just looked into it, and yeah, the numbers just didn't make sense. Like the returns weren't as much. So as much as we wanted to diversify into it and get into a short term, the
Hmm.
numbers just didn't make sense right now. At least with the home prices are still pretty high. Interest
Yep.
rates are very,
Really
very
high.
high. I think they're
Yeah.
pretty at their high. Well, let's see. I don't know. The Feds keep talking about another rate hike, so who knows? But yeah, it's reached like 06, 07 levels, right? Like seven,
Yeah.
8%, which is kind of crazy considering just a year ago was at like three and a half, three
Oh, yeah.
percent or whatever.
There are people a year ago that were getting under 3% on primary residence rates, and
Yeah.
now, yeah, you're
So
right. It feels extremely high, and I know you always talk to people. They say, "Well, in the '80s," and you're
yeah,
like,
it's
"Yeah,
like
well, in
it's
the '80s, houses weren't this expensive either." So
right.
I don't know. I think, and you also kind of mentioned like nobody really knows where interest rates are going
Yeah.
this year. There's a camp that says, "Hey, they're going up." There's a camp that say, "Hey, give it a few months, they're
Yeah.
going down." I think you just got to make it work for you right now at that interest
Yeah.
rate, and if it works, it works.
Refinance.
Buy it. If it goes down, refinance, great. But
Refinance. Yeah.
yeah, you just can't plan on that.
Yeah.
We just
Yeah.
don't know. We have no idea.
Absolutely. And then, yeah, I mean, if a great deal presents itself, do it. And that's my
Mhm.
kind of philosophy. It's like, hey, if something comes up, get it. And then you can refinance it. There are a lot of there's a lot you can do with real estate. You can get very creative with it, right?
Mhm.
So that's a cool thing. But yeah, back to the short term, it's that and the uncertainty on travel, right? Like post
Mhm.
pandemic, I think travel just exploded.
Oh yeah.
But now with the quote unquote recession, which is again, are we in it? Is it about to come? No one knows. Just looking at the stock market, it's I mean, our stock
Very
portfolio is just
confusing, really.
completely, yeah. So it's like we don't know if we're down or if there's more to come.
Mhm.
But definitely travel could potentially get hit. So high vacancies could, with short-term rentals, people not wanting to travel could impact. So we were like, we as much as I really want to, and it's such a very interesting space for me, and
Mhm.
also it's kind of passive, right? Like other than some sort of high level decision making, if you have a good property manager, you don't really have to do that much other than deploy your funds and then kind of get the returns, right?
Mhm.
But that's something we were really looking into, maybe to pick up like one or two short-term rentals. But yeah, I think for now, just passive investing, commercial hasn't been hit as hard.
Mhm.
So, syndicators could be picking up good deals right now,
Yeah.
especially with that last land deal to make up for the well, potentially crappy deal last year. But yeah, I mean, not as as a general partner, I still don't think I'm there yet. So it'll probably just be either short term, keep looking, or just get into passive syndication deals.
Yeah, and I mean that's back. Like I think that's the same thing. Like you're talking about, if the deal works, do it. And you
Yeah.
find a good passive investment, and the partner's trustworthy, and the deal looks good, and they've got the right setup and the right structure. Then people are getting great deals right now because there's some people that are not having so good a luck, and they're having to get rid of great deals.
Yeah, exactly. And if you have the funding, why not, right?
Yeah.
If you have the funding and if you have the capital, you might
Mhm.
as well deploy. I mean, as much as it's good to sit on cash right now as well, but they're I mean, most of these, if you can take the hit, and there's definitely money to be made, especially in the long term. And I'm pretty young, so I
Yeah.
don't mind sustaining that wave. I feel like it's an opportunity even in the stock market right now. So
Oh yeah. There's always opportunities. I love that. It's a good
yeah.
outlook because there's always opportunities, and if you're always investing, you're going to have long-term growth that looks really good.
Yeah.
Joel, and I know we asked this last time, just wanted to see if it's changed. Do you have a favorite business or mindset book that you like to recommend?
I think last time I said Rich Dad Poor Dad. I mean, that's a great mindset book. And
Yeah.
lately, I've been reading about apartment syndication. So the best book on apartment syndication, that's what it's called, by
Yeah.
Joe Fairless. That's the
Yeah,
one
that's
that
great.
I'm reading. Yeah. So and yeah, I listen to his podcast as well. So
Mhm.
it's a cool mindset podcast. Yeah, bigger pockets as well. It's kind of shifted into a complete mindset. So yeah, right now it's a lot of just mindset on how I can improve, and I'm trying to set up for the next chapter, in my life to kind of hopefully at some point become a syndicator, and maybe in the next 2 to 3 years.
Yeah.
But yeah, those are the books I'd kind of recommend.
Well, I think you hear everybody's story, and a lot of people start passive and then they get active. I think it's a great way to learn how to become a general partner is be a limited partner. See how the general
Yeah.
partners do it.
Yeah, absolutely. Like learning how to pitch deals and
Mhm.
understanding the numbers, how folks position the deal to make it, as an LP, like, hey, this is how much you're going to make, and this is what the great opportunity I have. So yeah, it's
Mhm.
good right now to view it from that, because I know going into it, like, most folks just like, hey, yeah, keep pitching me deals, but I'm reading it like that, where I'm like, let me see how they're doing it, so that
Mhm.
because I know at some level someday I definitely want to be doing it, because I feel like I like real estate enough, and I feel like
Mhm.
I can replace my tech income with syndication. I think there's
Oh,
a decent amount of
100%.
money to be made, as just like with the management fees and stuff like that. Initially it's like, oh yeah, how much can you make? But after reading the book and breaking down a couple of deals, I think I can replace, but it's the the lead time going into it, there's a bit of legwork up front, which
Oh yeah.
again with a young family is kind of tricky, and it is a high risk, right? It is
Mhm.
especially also with the economy with the way it is. We have pretty happy-go-lucky chill tech jobs where I can
Yeah,
work from home whenever. I could shut off and do a podcast right in the middle of the day.
that's not
So
bad.
it's kind of, yeah, it's kind of a sweet gig to walk away from.
Mhm.
But I know eventually, like my goal in my philosophy right now in life is just I want to free up my time to spend time with my family.
Yep.
So
There's nothing more
I think
important than
real
that.
estate is the way to go. Yeah, yeah, absolutely.
Yeah, no, that's awesome. And a lot of people, the reason they get into real estate investing is because they want to buy their time back so they can do things like spend time with their family, which is what really matters. Um,
Yeah.
Joel, is there a best way for people to get a hold of you or to follow you? Just learn more about what you're doing.
So I don't have a social platform to market my stuff. I'm not there yet. Like I'm not doing anything like fix and flips actively or anything like that. But yeah, if anyone wants to connect, my handle on Instagram is JJ D'Souza 25. That's JJDSOUZA 25 on Instagram. And yeah, I mean it's more personal right now, nothing
Mhm.
professional. But if anyone wants to connect, have questions, feel free to reach out. And Jordan, I think if you want to include my email, but it's joel.d'souza at atxd'souzaproperties.com. I think it is.
Mhm.
But yeah, you feel free to, you can include my email, I guess, in the show notes. But if
Cool.
anyone wants to reach out.
Yeah, no, we'll get that in there. And you're at JJ D'Souza 25.
Mhm.
JJDSOUZA 25 on Instagram. I'm at Jordan_Moorhead on Instagram.
Sure.
Make sure to give Joel a follow and follow me there too. Joel, thanks so much for coming back on here again. You've made so much progress in just the year, I think year and a half since we talked first. I'm excited to have you back on here in another year and see where you're at.
Awesome. Thanks, man. Thanks for having me on.
Absolutely. Thanks for coming.